Good morning and good afternoon to all of our attendees. Thank you for joining today's Family Office Network's webinar series. Democracy Investments is a new mission-driven asset management company based in the San Francisco Bay Area. The company develops strategies to incentivize democracy, and their Democracy International Fund is an ETF listed on the New York Stock Exchange with their ticker symbol DMCY. Before we get started, I would like to introduce our speakers today. Julie Kane, the firm's CEO, is a former U.S. Navy helicopter pilot and is deeply passionate about democracy. Her 20-plus year career in financial services includes time at Wells Fargo, Charles Schwab, SEI Investments, and Autodesk Ventures. She holds a BA from UVA and an MBA from UCLA. She also chairs the board of Swords to Plowshares, a nonprofit helping over 30,000 veterans in the Bay Area. Christopher Brown, the firm's chief investment officer, has over 30 years of financial service experience, including constructing multi-asset portfolios for institutions and ultra-high net worth families at Franklin Templeton. Chris holds a BA from UCSB and received his MBA in International Business from Thunderbird. Lastly, Dr. Richard Wazowski, the firm's chief economist, is a successful marine robotics entrepreneur and a leading data scientist with more than 20 years of experience developing probabilistic algorithms. Rick received the first PhD in marine robotics from MIT, and he holds a BS in mechanical engineering and economics from CMU. At the end of today's presentation, we will have time for Q&A. We encourage your questions, so please use your questions chat option on the right side of your screen to submit all questions. And Julie, I will let you get started.
Thank you, Lindsay. We're super excited to be here. All three of us are very passionate about democracy, and we cannot take that for granted. But before we get into that, I'd like to set the stage with why we believe international investing is attractive right now. There we go. These two graphs from the May 2021 Yardeni Research Report show 20-year trends. The red line shows the US forward PE multiples are at a relative post.com high. International is elevated, but is cheaper, about 25% cheaper relative to the US. The chart below shows the spreads between the two are at an all-time high, indicating a substantial premium for the US over international right now. We believe there will be a trend towards investing in cheaper international equities. As people start to move capital out of the US, where will it go? This map is from The Economist, and it is a snapshot of where you could be investing. If you choose a purely market cap weighted index, you could be investing in countries that do cyber attacks, genocide, slave labor, countries that are stealing our tech and messing with our elections. Your typical all-world ex-US equity index has been allocating more and more to authoritarian states over the last 15 years. And in emerging markets, it can be as high as 30 to 40%. The Economist Democracy Index, it scores countries across the world. Authoritarians are a 4.0 and below, while democracies score a 6.0 and above. Sadly, democracy is in decline across the globe, and you will hear more about that from our chief economist in a bit. Democracy is under serious threat. Authoritarians are rising, and that rise is being financed by our very own investment community. What is the solution? How do we address this? Our solution is to find a well-respected, third-party, objective, and transparent measure of democracy so we can incorporate democracy as a factor, which we have. Since 2006, the Economist Democracy Index has been tracking 60 indicators that roll up into these 5 themes. Countries that score well embrace ideals such as freedom of speech, free and fair elections, and civil liberties. Countries such as Norway, Sweden, Japan, the UK, Canada, France, Australia, and Taiwan. Countries who score poorly are authoritarian states, states with less transparency who allocate capital politically instead of economically. Democracy Investments has an exclusive license to the Economist Democracy Index, and we use that as an overlay on an all-world ex-US index. So the resulting index that we track is both market cap and democracy weighted. This means the portfolio is overweighted in securities in democratic countries and underweighted in securities in authoritarian countries. We are betting on democracy, and a bet on DMCY is a bet on democracy. Now I'll turn it over to our Chief Investment Officer, Christopher Brown, to share more about our methodology and our index.
Thank you, Julie. So we established the compelling arguments for international equities and democracy and the challenges that democracy faces. And we wanted to figure out how we might blend the two together without sacrificing either one. So we started with a global US index similar to the MSCI ACWI ex-US or the FTSE All-World ex-US. This reference index contains approximately 2,500 securities of large and mid-cap names from both developed and emerging markets. For each security, we apply a country of risk. Now, this is a multi-factor designation used to appropriately ascertain the effective legal and cultural home for each stock. After that, we multiply the weighting of each stock by the relevant or pertinent democracy score from the Economist Democracy Index. Once we've completed that process, we proportionally normalize the product so that all the sum of the weights add up to 100%. And we have the Democracy Investments International Index. Again, as Julie stated before, we using objective third parties in a systematic and transparent fashion in order to generate this index. So we ran some back tests, and how did they turn out? On the next slide, you can see we took this methodology and ran the back test to see how the strategy would perform. And as you can see, our index hugs the performance of the reference market cap weighted benchmark index that has no democracy factor in. While we always hope for some kind of dramatic outperformance when you perform these back tests, we were quite gratified that even with the reallocation from authoritarians to democracy, we see very similar returns, even during periods that represented substantial greater inclusion and outperformance of authoritarian regimes. So investors, our takeaway from all this is investors won't have to choose between returns and outcomes. The next thing we did was we looked forward. We wanted to see how these country tilts might affect various industry sectors, just to figure out where any potential landmines might be here that might be affected by our systematic process. And we were very gratified to see that there weren't any major dislocations from the market cap weighted index. An example of this is the energy sector, where we pretty significantly underweight Saudi Arabia, but it ends up being offset by overweighting Canada and Norway. The back test then also showed the comparable Greeks and ratios, and we can go into this a little bit more during Q&A. We have sort of realized alpha up there. I'd prefer to call it smart beta because we are a systematic process. But the first three, our beta is relatively close, or is almost smack on with the index, and we have a very low tracking error. Now to discuss the political and sociological effects and benefits, I'm going to turn it over to my colleague, Dr. Richard Rakowski.
Thank you, Chris. So we're all here because we care about democracy. And we look around at the world today, we read the news every day, and it's, I think, very natural to ask the question, what's going on? It doesn't look so good sometimes. And so I'm just going to give you a real simple tactic to watch for, and it's divide and conquer. It's the oldest trick in the book. And the authoritarians are trying to divide the democratic world. Between nations, they're trying to break up our trade unions, our trade agreements. They're trying to break up the EU. They're trying to break up our military alliances like NATO. Sometimes they go and they try to break up our countries. And there are plenty of reasons why countries sometimes break up. There are plenty of internal movements, but often they will choose to back certain movements that are causing countries to break up because that pursues their agenda. So whether it's Brexit or Scottish exit or Catalonian exit or Texas exit or California exit, backing these things is always the usual suspects, right? And they also act internally, inside of our countries. They try to drive wedges between every conceivable group that we have, whether it's based on ethnicity or race or language. They're constantly trying to divide us. And why are they doing this? They need us to be dysfunctional. And they need us to be dysfunctional because the freedoms that we have in the democracies, plural, right? And there's plenty of democracies in the world, different forms, that's great, right? But the democracies, plural, have freedoms that are a fundamental challenge for the authoritarians. Freedoms like free speech, freedom of assembly, free elections. These fundamental values that we have are values that the authoritarians do not want to bestow upon their people. And so they need their people to see us as dysfunctional so that they don't want the freedoms that we have. And so democracy, if you feel like we're having a problem, you're not wrong. So the Economist has published the Democracy Index for many years and shown that the average country is going downhill. Freedom House has done something similar, and Freedom House, to their credit, has also calculated a population-weighted score for freedom. I think both of those are interesting. But I think the real driver behind what we're seeing is economic. And so what I want to show you now is the GDP weighted democracy score for the entire planet. Take every country on earth, take its GDP by year, multiply it times its democracy score for that year, and you can calculate out the democracy score for the average economic activity every year. And what you see is an unmistakable downward trend. We start off in 2006 with an average democracy score in excess of 7.5 for global economic activity. That's really solidly up there in the democratic regime. Today, it's below 6.6 and going down. And if this trend continues for another 5 or 10 years unabated, the average economic activity on Earth will be happening in a hybrid regime. Now, a hybrid regime is that sort of no man's land between full-on authoritarianism and democracy. Sometimes it's called competitive authoritarianism. It's where there are elections, but you can kind of choose your leaders, but you can't choose to get rid of them because their thumb's always on the scale. And that's where we're going to be within 5 and 10 years if this trend doesn't break. So you may be asking yourself, what's driving this? Why is our GDP weighted democracy index going downhill so fast? And I think it's because of investment. So what I want to show you next is the market cap weighted democracy index by year. And pay attention to the red curve for now, please. So the red curve shows the trend over the last 15 years. We start off with a democracy index score for investment of approximately 8.2, and it's down to 7.4. It's been going downhill fairly continuously. And you may ask yourself, well, why is this happening? Right, good question. And it's two things. First, the democracies are becoming more authoritarian, point blank. But secondly, we are reallocating capital towards authoritarian nations. And you may think, oh, it's just 1 or 2 authoritarian countries, and no, it's not that. We are reallocating capital towards lots of authoritarian countries globally. This is a global problem, and we are pushing money into authoritarians and enabling their rise. Now, this is not a problem which has Cold War solutions. This isn't a containment problem. This isn't a nuclear deterrence problem. This is a problem literally of investment, that we as private investors are putting money into international funds and not realizing how we are funding the authoritarian rise. So this is kind of scary. And the question is, how do we, and it's especially scary in light of what Julie showed, which is that the smart money is likely to be flowing internationally soon because of the PE ratios. So we're likely to push that curve further downhill. So what can we do? And that's where what Chris presented is so important. So the blue curve here, the blue curve shows our democracy weighted portfolio. And first of all, it starts off higher. It does not trend downhill nearly as much, and it stays above 8 the entire time, which is a very good democracy score. Now, we're sparing you a lot of the numbers right now that characterize the difference between the two portfolios, but the country that loses the most is Saudi Arabia. They're down 72%, which means they only have 28 cents on the dollar from where they started. At the other end of the spectrum, Norway gains 31%, and everybody else is in between on the spectrum. This means that we're stimulating economic growth in the democracies and we're inhibiting economic growth in the authoritarian states. But what we're also doing is creating an incentive, a market-based incentive to pull people from authoritarianism towards democracy. If Saudi Arabia becomes like Norway, under our index, they end up with 4 times as much money. That's a powerful incentive. And this is the sort of incentive that I believe we need, and we probably need several incentives like this, but we need these sorts of incentives to try to impose stability on an unstable world, provide a restoring force away from authoritarianism and towards democracy. And I think that what we've done in terms of the index and the ETF that's based on that is, I think, a solid solution, because we haven't tried to make investors choose between returns and democracy. We're trying to give them exactly what they expect in an international index fund, or nearly exactly, while also creating this incentive. But I think it's reasonable to also ask the question, why do you think that this incentive is going to work? And it's a fair question. And we worked pretty hard to structure this incentive around what I think are 4 important properties. The incentive should be simple, transparent, fully automatic, and ultimately credible. This incentive is simple because just based on the democracy index. If a country's democracy score improves, they get more money. It's as simple as that. If they go downhill, they get less money. There's no ambiguity. It's transparent because the Economist publishes the democracy index every year. You can go online, you can find the data. You can go to Wikipedia, they got a beautiful set of tables. You can see what every single country is getting as a score. And if you dig into it, you can see the 60 questions that the score is based on. You can see the answers to those 60 questions. You can see how if a country changes some of its properties, their democracy index score will change. And we're ultimately going to put a calculator online where countries can actually see how, if they change their properties, how their portfolio allocations will change. We want people to know that we want people to have a completely transparent connection between the actions they take and the allocations they will get, so that their decisions are guided by greed. We want them to want more money and become democratic. We've also created this index to be fully automatic. We're passive, and in this circumstance, being passive is a tremendous strength. It means that if a country's democracy score changes, they can reliably expect there will be changes in their allocation. My thumb isn't on the scale, right? Chris's thumb isn't on the scale. We're not like a hybrid regime where you kind of have the system rigged. This thing runs on autopilot, and if countries change, they can expect positive or negative consequences associated with their actions. And ultimately, because we are simple, transparent, and automatic, we're credible. Everyone believes that under this system, if they do what they need to do to improve their democracy, they will ultimately get more money. And that can drive behavior. So what we've shown is that money is going to be flowing internationally. We've created an index and an associated ETF that behaves like an international index, but creates these market-based incentives. We've shown that the incentives will push authoritarians towards democracy and stimulate the democratic economies. And so our plan only really has one weakness, and that is that the magnitude of the incentives scale with assets under management, right? So that's why we're appealing to you as investors. We need assets under management so that we can create strong enough incentives to pull the world away from authoritarianism and towards democracy in an era where we don't have a lot that's pulling us in that direction. And so we're traded as DMCY on the New York Stock Exchange. That's the ETF that is based on the stock index. And we are appealing to you for your investment. So if you invest internationally, please consider us. If you invest in international index funds, you should seriously consider us. I think we're a good option. And if you have colleagues who are doing the same, please recommend us. Again, we're DMCY. You can buy us through your favorite broker. And with that, I'll turn it over to questions.
Thanks, Rick. Well said. And on the economic side too, it'll be, these shifting of capital flows will lower the cost of capital for democracies to fuel their economic growth and raise the cost of capital for authoritarians to slow their economic growth. And Lindsay's going to give us a refresher on how to ask questions. Go ahead, Lindsay.
Yes. Thanks, Julie. Yes, again, we really encourage your questions. We have opened the platform to you all, so please use your questions chat option on the right side of your screen to send those on over. And Julie, I'll let you get started.
Excellent. So our first question is from Ms. Slim in Tunisia. How do you mitigate FX risk in emerging democracies? Do you invest in listed equities and or private companies? I'll give that one to Chris.
Sure thing. Thanks for the question, Slim. We invest in listed equities. We do not hedge the portfolio. It is all done when we do it as a standard index fund would do it. So part of the investment rationale for these things for most folks is that they want that currency exposure or they're looking for that international currency exposure. So our portfolio is unhedged. The current and the index is an unhedged index. The current ETF portfolio it currently has about 200 names in it. We're doing index replication there, and and to keep costs down and trading other trading factors down, we're using a combination of regional and country ETFs along with a large list of specific listed securities. I hope that answers your question.
And if I could just say something, I am really happy to have someone from Tunisia here. For those of you who don't really know, Tunisia really was they're a pretty authoritarian country, and they led off the Arab Spring, which had a lot of chaos, but the real winner coming out of that was Tunisia, which has transitioned to it's a work in progress still, but it's a beautiful little emerging democracy, and I'm just thrilled to have someone from Tunisia here today. So thank you.
Our next question is, what is DMCY trading at currently, and what has been the growth since inception? Since we launched on March 31st, our growth has been 5.58%. And Chris, can you look up where it's trading now? I don't have the number.
Yeah, sure.
We don't have the number at our fingertips, but you can enter DMCY and go to our website, www.democracyinvestments.com, and our fund page has all of that information.
It's about $26.50 a share right now.
Yeah, it's almost, well, yeah, roughly. It's between $26.50 and $27 is where it's been, and the number that Julie quoted was through market close last Friday.
And so
the other factor, and by the way, the other factor in that is please take a look at what we've done relative in that particular period of time relative to our market cap weighted competitors. So far, we've been, I'll take lucky over good, but we've had nice performance relative to our market cap based competitors.
Did you want to say something else, Rick?
No. So
Okay.
say what Chris said.
Okay. Our next question is, how do individual countries gain and lose compared to the benchmark? A little more detail into that. Rick, do you want to speak to that?
Sure, if you want to pull up that slide. We can, essentially, you can look at the differences between the two portfolios and pretty easily calculate how much any individual country's change will affect the portfolio relative to the benchmark. The single biggest driver of relative performance by itself would be China. If China gains 10% relative, if China outperforms by 10%, we will underperform by 0.8%. If China underperforms by 10%, we will outperform by 0.8%. The rest of the portfolio is smaller. I think Canada's on the order of 0.16% for 10% outperformance. So there's not a lot of major drivers. And yeah, were you able to find that slide, Julie?
Yeah, cannot hear. Let's see.
Yeah. All right. So anyway, the bottom line is that in general, it just averages out. And there is some China noise in there. But if you look at our correlation coefficient with the benchmark index, it's about 0.995. It's really, really tight. So here we are. All right. So yeah. So Norway, don't worry about it. We'll come back to that later. So okay, should we go to the next question, Julie?
Sure. Let's see here. Okay, next question. Love the philosophy, but you aren't really discussing the benefit of lowering risk if you invest in the next Venezuela or today's China with massive fraud. Your capital is at risk. DMCY has much lower risk of total loss from government-sponsored theft and fraud. You want to speak?
Yeah, there are a series of other ancillary benefits that go on there. From an impact perspective, you have where are most of the environmental fouls occurring? More in authoritarian regimes than in democracies. Where are most of the human rights abuses occurring? More in authoritarian regimes than in democracies. I always like to ask the question, when was the last time two democracies went to war with one another? Very rare that particular event occurs. And I think that the other, and to your particular point at the end of the day, the authoritarians allocate capital politically, not economically. Whereas in a democracy, you have much more allocation of capital based on economic factors. As we've seen with the former Soviet Union and others, you can play that game for a little while, but eventually it catches up to you. And we can get into a broader discussion in terms of, will the last 10 years, 10 to 15 years, can we move that forward and look at that for the next 10 to 15 years? Will there be the same, or will there be shifts in both policies and economies that will completely change the way authoritarians even transact and relate with other democracies out there? So yes, thank you for the point. I have a long family history in Venezuela. I know it well, and I pray for the Venezuelan people. It's a very challenging situation.
And if I could just add to that a little bit, corruption has a cost, right? When the government's skimming money off the top, that's a cost, right? And that cost has got to come from someplace. It may come from the investors. It may come because they're using slave labor in a labor camp someplace. But somehow, everything has to balance out. And frankly, investing in corrupt countries, which is what authoritarian countries tend to be, is simply, I think, a bad proposition in the long run.
Okay, our next question is, how sensitive is the portfolio to country outperformance?
Didn't we just answer that?
That's all right.
No, we talked about a gain versus the benchmark.
Yeah, so Japan has a significant impact on the portfolio. China obviously does, and as it's become larger in the portfolio. The nice thing is that it's a diversified. I think we showed you the list of countries that are in the fund. It's a diversified list of countries, and so one particular one doesn't have massive impact over another. They're moving in a very like I said, diversified manner. So the idea that one country could crater relative to the market cap weighted index. So we think we've got enough diversity across, both from a country and regional perspective as well as an industry perspective, that you're well enough diversified that all your eggs aren't necessarily in one basket. This should be a core. We've designed this to be a core central holding for an international allocation. You can do some satellite around it depending upon what your own particular tilts are, but we feel like this from a returns perspective should be part of a core international allocation.
Our next question is, how do you compare yourselves to ESG? We've had a lot of discussions around this. We consider ourselves an impact asset manager, but we're a new category that's more top-down versus the bottom-up that thematic ESG funds tend to do. If you're starting with countries that are securities and countries that are by nature more democratic, then you are by nature getting more investments in countries that care about environmentalism, human rights abuses, diversity on boards, et cetera. So we like to think of ourselves as, let's start with the D and then think about ESG if your focus is impact investing. So for example, if you start with an E for environmental, you may be investing in wind farms and solar panels that were built by forced labor and stolen tech. But by starting with a D, you're filtering out impact in a new and very measurable way. Our next question is, well, we're all betting on democracy and understanding its biggest threat within the next 5 years. What is your prediction in the next 10 to 15 years? I'll give that one to Rick.
It's funny. I would say that predicting democratic trends is in some ways like predicting the weather. Like you can predict it out a couple days. You can't predict it out 3 weeks, and yet they can make broad statements about what's going to happen in 2 years. I think the next 10 to 15 years are going to be really hard to predict because there's going to be a lot of chaos. Sooner or later, Putin's going to retire, right? Many of the oligarchs left over from the Soviet Union, they're all reaching their expiration dates. The turnover in Asia is very complicated. You go back to 1991, the Soviet Union had 8 times the GDP of China. China today has 8 times the GDP of Russia, right? There's a whole bunch of turmoil happening over there. And how those countries evolve is going to be very complicated. But I think going out and maybe going beyond 15 years even, I think that the real place to watch is going to be Africa. Post-World War II, I think we've really seen a rise of Asia, right? And that's been very complicated. But I think that as their per capita GDP continues to rise, and we are in a world of free trade and pervasive cyber espionage, the trend is towards per capita GDP and technological parity. And as that trend continues, there's going to be a push towards investing in lower and lower income markets. And if you look at Africa, Africa doesn't have a lot of institutions, right? It scores poorly on the democracy index, sometimes because it's authoritarian, and sometimes because they don't have institutions at all. And that's really where the competition is going to be. And if you look at by the end of the century, the U.S. population is projected to increase 150 million, India by 250 million start coming down, Africa by 2.4 billion, and the rest of the world is net zero, right? There's basically no population growth outside of the US, India, and Africa. And so, with Nigeria projected to be 750 million people in the third largest country by the end of the century, and all these other rising African nations, I think that that's really where we need to be concerned about the fate of democracy. Which way will Africa turn? And I honestly don't know. But the rising authoritarian economies are investing in Africa, and they are competing with us for a worldview in Africa, and it's something I think we really need to think about.
Yeah, if I could tack on to that, Joel, I happen to be personally a big fan of Peter Zion and his viewpoint, and he goes basically into looking at demographics and geography as being determinants of pathways forward. Who can feed themselves? Who can provide themselves energy? All these other things. His fundamental underlying premise is that globalization will start to retreat in various ways that we might not be able to understand or appreciate right now, and that folks that can feed themselves have proper access to energy and things like that are going to be successful, and those that can't are going to find trouble. But mostly around demographics and geography around that.
Well said. Our next question is about our projected product roadmap. What's next after the ETF? Chris, do you want to speak to that?
Sure. We can come at this from a number of ways. Rick had already started mentioning about Africa and frontier markets, and Rick and I have been doing a lot of work around looking at things like democracy score relative to per capita GDP and some other things around that. But the logical places to go would be looking at a frontier markets product. We can also slice and dice this several using the Economist Democracy Index. We can do multiple permutations. For institutions and larger family offices, we can do bespoke portfolios for them around specific criteria. One other, for institutions, for example, that might not want to have authoritarians in their portfolio at all, or have any passive into authoritarian, and carve that piece out, we can simply take everything with a 4 and below in the democracy index and eliminate it. And that way, an institution doesn't have to say we're not against a particular country. It's simply a form of government that we're excluding from the portfolio. So it'll be those types of things, depending upon where market demand dictates, that we'll be rolling out. Rick, do you have anything on that?
Well, I think that we also need to look at the sectors of the economy that are really dominated by authoritarians, and in some places it may make sense to craft more surgical products. For instance, if you go and calculate the democracy index on a barrel-weighted basis for the entire planet, the average barrel of oil does not come from a very nice place, And I know that the ESG crowd would kill us, but I kind of want to do an impact oil and gas fund, essentially overweighting democracies and underweighting the authoritarian states in the oil and gas market, as well as in the renewables. Because right now, unfortunately, we have a choice on energy. We can choose oil and gas, and we essentially push money towards one set of authoritarians, or we can choose renewable energy, and we're sending money to a different set of authoritarians. And so either way, we're really kind of not doing so well. And when you see those sort of market idiosyncrasies, where a sector is pretty heavily skewed, or at least has a high percentage with authoritarians, I think that that's worth having more surgical products.
Okay, looks like our last question is, how did we get to the mafia state situation? Rick, you want to speak to that?
Well, okay, so you start off with communism, right? And I'm a Cold War kid. You have to study this stuff a little bit, but you start off with communism. And you have this planned economy, and people forget that in the planned economies, people still got income. They could still go and buy things, and they could, make personal decisions about consumption, but they didn't have anything to buy. So with the planned economy, there were inefficiencies because they had, fixed production, fixed prices, and essentially no plan survived first contact with reality. So there were always shortages. But those shortages were actually smaller than people appreciated because they were filled in by the black market. And the nature of the black market in the communist countries, I think, is the most understudied aspect of the Cold War. We gave these guys a 70-year runway where the black market systematically outperformed the planned economy and grew and grew. And so we thought that when communism disappeared, that these guys would just naturally turn into a beautiful free market state. But the only people who were practicing the free market were the mafia guys. And so when communism molted, they just emerged as a mafia state. And that's a lot of what we're dealing with today. And this isn't true of all the communist countries, but many communist countries evolved into mafia states, and they are essentially international crime syndicates. And this is a serious problem.
Well said. And on that note, I'd like to remind everyone, there's more information at our website, www.democracyinvestments.com. And we've really enjoyed having you here today. Would love to get your feedback on what you liked, what we could improve. You can email us at info@democracyinvestments.com. And we look forward to hearing from you.
Thank you so much. And yes, to all of our attendees, we thank you for joining us. My name is Lindsay. I'm actually going to be following up with all of you individually. So as Julie mentioned, if there's anything else that you would like to ask or get in contact with the team, I would be more than happy to make an introduction. We hope you have a great day, and thanks for joining us. Bye-bye.
Thanks for hosting us, Lindsay. Have a great day, everyone.
Thank you.